Hello friends, good week. How are you? Vladimir here, and this is the weekly review for the last week of November 2012. We are coming closer and closer to the end of the year, and as I said not once, it's time to be careful. Use very small trades. Do not risk a lot. And if it's not clear, better to stay away of the market. Why? Fiscal cliff is coming. The volumes are going lower and lower each and single day. The traders are going out of the market closer to the end of the year. Well, that's the main reason for that. For acting very careful. I know we all are looking for the best opportunities, but as I said not once, when it's not clear, especially on such markets, play very careful. And that means do not use leverage, use negative leverage, and it's better to trade investor style this period. So let's go over the markets and see what do we have. But before that, what did we have on the last week? Mainly nothing. Just Friday we got some good environment, we could say, worldwide. The expectations about finding solutions for the fiscal cliff. The talks about Cyprus to get rescue as well. All this contributes for good environment in the market, but be careful. The talking, the conversation and the meetings on the Europe and the final decision about the budget removed after the beginning of 2013, which means they do not have nothing. That's what it means. So we have to act very carefully, and from my point of view the market was acting very overvalued on Friday, and let me explain what do I mean. Let's take a look on the first pair, and that would be the first pairs, even I would say, and that would be the Japanese pairs. But this is the pound yen. Let's see what do we have. First of all, we got the divergence here, we got a down move, everything is perfect. Then with a bullish hidden divergence, it retraced up, all up to here, very perfect. But what do we have right now? That's a clear bend to bend move. It's pretty narrow. I wouldn't say it's tight. Maybe it's tight. So even if it's tight, we could go for a duplication, which will also bring the RSI closer to 80. Okay, and if it's wide, not narrow, it means we could go for a bit more just to make half of this move higher, and the combination with the 4-hour chart divergence would provide us a sell opportunity. Let's see what we have on the 4-hour chart. On the 4-hour charts, we already have a perfect divergence set up. That was the first one, which provided us this down move, right? It even started earlier. It even started here, as you can pay attention, right on this level here. Okay. I'm sorry about the voice, by the way. I'm still cold, so if there are any interruptions, I'm sorry. It started here, so definitely there is a good potential that we are going to see a correction all the way down, which means something like 150 points or maybe even more. There's a trend line started here, as you can pay attention, between these 2 points, right? These two lows from here up to this level, which means there is a pretty nice opportunity that the pair is going to move down. Now, where's the only problem? MACD, it might go and create right now another high. Okay, stochastic still has room to go. If it does, RSI will come closer to 80 again to create a divergence around the top, and in other words, it's creating a real top. Now pay attention, this is a daily chart again. We are playing around powerful resistances here. That's also the weekly chart. On weekly chart it's a bit difficult to see that, but also on weekly chart we are playing around tops, around clear top. So even if it pushes higher, that would be volumeless, and it's going to create stop here. That's why I do not recommend buying these pairs, the yen pairs right now. I recommend find the correction down and to look for buy only then. And until then, my recommendations are looking for sell. And how do we look for sell? 4-hour charts or daily chart, attacking the levels or waiting for 10 candle patterns. I suggest investor style, which is attacking the levels without leverage, without stop loss. Why without stop loss in this case? Because as we saw, based on daily chart, it still could play a bit higher. It's pretty clear that this range of I would say 400 or 500 points up to here is the final level, and from there we're going for we are in front of a bearish cycle. And we can also understand that if we pay attention based on ATR channels, we are well based out of the ATR channel, which means prices will create a top somewhere around this range, and most likely will try to enter back to the ATR channel. So definitely the yen pairs, and the pound yen is one of them, are providing perfect sell opportunity. The next one will be the euro against the yen. Same story. I'm already in, of course. Started the attack once the divergence appeared, and that's, I'm talking about this level, as you can see here, right? Started here, so I'm inside, even a bit earlier. That's here. Okay, I'm inside, attacking the next levels on each of the resistances here and here again, and we can see it's playing around the top. It's pretty clear. We have double riding of the Bollinger Band. Perfect setup on the daily chart. Same story as the pound yen, band to band move, playing around the clear top. Now what could happen here if we pay attention? Oops, sorry, this is the line. If we pay attention, there is something that looks like that, as you can see, right? Something that looks like that, some very powerful bearish channel. Of course, I'm not on the straight on the peep here. We are playing on very top. Even if it pushes a bit higher, we're on a stiff resistances range. If you pay attention, that's the one right now. We have one bit higher, one bit higher. We are playing at the top. It's going to make a stop, and it's pretty clear. Could it push higher? Of course. That's why it's better to trade here investor style. No leverage, no stop. Give it a chance to play. Give it a chance to create its cycle. This is a monster divergence, and it's only a question of time until it covers the down move again. And it's pretty straight move. So if we measure that, right, whenever it stops, there is a pretty nice opportunity for the pair to make at least third of the Fibo. So we could expect for something like 200 points or so, maybe even more. Alright, so that's about the euro yen, which I also expect to create a top. Of course, it's relevant for any yen pair. OZ yen, which is also doing the same, just does not have band to band, but does reaching resistances, and RSI is coming closer and closer to 80. Last time RSI came closer and closer to 80 was here, and after that we all remember what happened, right? That's the place. Created a divergence and crashed like crazy. I'm not sure this is going to happen this time as well, but there's definitely a potential for deep correction. I'm talking about deep for OZN, and I'm talking about between 100 to 200 points correction. I keep going and going. It could be Swiss yen, it could be Kiwi yen, whatever you can imagine, even, and that's relevant because I am here this weekend. As you know, I'm in Poland. Polish yen, also perfect setup, band to band, coming for a very clear top. So only question of time until it makes the move. It's pretty clear here. So if I have to summarize, all the Japanese yen pairs, of course the dollar yen as well, are creating a top, right? And it's going to make a stop here and make a deep correction most likely. and that's the time, even if it goes against, that's the time to look for sell opportunities and to increase the sell opportunities, to sell trades, even if it pushes higher. And maybe it's difficult to accept that, but that's what we do when we have a clear bearish cycle on longer term, and look for the correction. It's going to happen whenever it happens. It could push and play a bit higher, as I said. That's why we trade investor style. Okay. The next interesting pair will be some majors, and I'm talking about the euro dollar. Euro dollar is very, very, very interesting. Why? Well, it made a bend-to-bend move clear. No, it has some interruptions, but right now the euro dollar has something that reminds a channel. Based on that, it also has a beautiful hidden divergence, and also on the stochastic. On the 4-hour chart, it's pretty clear that we do not have any continuing divergence here. It used to be here, right, on this place. Now it pushed a bit higher. Now we're almost around extreme divergence. So mark several resistances, 1, 2, maybe 3, or even, I'm sorry for the cough, maybe even a bit lower, like 1, 2, no, that's not the one, 2, and then 3. That's okay, that's standard levels from my point of view. We're going for a stop here, and for the euro to retrace all the way down to the 20 MA at least. Most likely it will go even and try to push back to the trend line or even deeper. So I'm not one of those that are very excited from the last move up for the euro dollar. I think it's limited, and well, I would say that as long as the euro dollar is below the last important resistance, 130, 130, I would treat it as a very, very bearish zone, and I would look only for sell opportunities. Same, of course, from my point of view about the pound dollar. Maybe it's a bit early yet, but there is a potential of the hidden divergence to be created very, very soon. So what I do suggest is let it play around, let it create a divergence around these levels, and I would go and say, from my point of view, it's going to create a divergence between 160.70 up to 160.170. It's going to create a beautiful divergence and make all the down move again. When I say all the down move again, I mean something for like 159.50 at least. So there is definitely a bearish expectation for this pair. Another interesting thing would be the Aussie against the Kiwi. Pay attention for this potential bullish hidden divergence on the daily chart. On the 4-hour chart, look for buy opportunities with any of bullish divergence that we could have there. Very simple. I don't feel like I have any, well, even to elaborate more than that. And a few words about the indices, which are playing on a clear top and are going to stop as well. Daily chart on each of them, whatever you choose, Dow, Nasdaq, S&P, or whatever you choose, shows you there is a hidden divergence, right? On a daily chart, we're playing also around the 200 moving average. It's pretty clear, I'm sorry, that it's going to make a stop. There's a trend line, so that's the maximum we could allow. We are coming to the very, 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 very top. Based on daily chart, it's there. Based on 4-hour chart, there's a potential divergence, potential RSI 80 visit. So, and we have already 20 candles right. It's still a bit early here because I think it's going to play around, but around this range, between these resistances here, look for a stop. Look for a stop, a divergence to tick down with the MACD histogram, create some candle patterns. That would be perfect time to start the attack. And based to the hidden divergence, we might go all the way down for at least the last low. Same about the Nasdaq, beautiful hidden divergence, and same about the S&P. Wherever, whatever you choose, it shows the same. Remember, the maximum we could allow are the trend lines, and it could reach it before crashing down. Well, I was talking about soybeans some while ago, and I think it's time to be there, investor style. I do think it could push lower, and as I said it earlier on my earlier um, reviews, that if the pair pushes lower for something like the trend line level, which is here, right? It could go and push something like 1270 or so. That could be perfect buy opportunity, but we already have a bullish hidden divergence. So we could go and we should go and attack the investor style. Our target would be the trend line, which means we have plenty more to go, at least 75-80 points back to the daily trend line. And if it pushes lower to the levels I discussed, then it will be another beautiful additional trade and to cover the whole way up. So stay tuned, as it might turn to be perfect opportunity. It's already. But if it pushes a bit lower, then it will be perfect opportunity to increase the exposures. Well, gold and silver, as I explained on the previous weekend and previous weekly review, if they make the break up, which they did, we should expect for a continuation for an up move, and I still think that there is room to go. I do think that the gold could go and reach at least the previous high around 1790 or 1785, maybe even new high. So I would say every short-term correction down should be used as buy opportunity. Same about the silver, which could go, sorry for the cough, and push higher for daily Bollinger Band duplication, for example. So every pullback on the intraday should be buy opportunity, at least for the previous highs. That's what I think. And of course, as long as the daily chart holds above the 20 MA of the Bollinger, if it breaks down, careful. It's a warning sign for us. But as long as it does hold above, that's a wonderful sign. So, to summarize that, our opportunities are silver gold buy as long as it holds above the daily 20 MA and makes intraday corrections down. Yen pairs, sell investor style. And don't be scared, of course, if it goes against you a bit. As long as it's investor style, you don't have nothing to worry about. Euro dollar is playing around the top. Pound dollar is going to create a top. Indices are playing around the top, and we should look for sell opportunities there. When I say euro, it's relevant as well for the euro pound, which is also creating some interesting beginning. And it might be that the euro pound very soon will create a top and will push all the way, something like that, up and down all the way back to this trend line. All the euros. And that's our opportunities, friends. That's what we have for this week. Remember to act very careful, without leverage. Do not risk too much. We're coming to the end of the year. Keep the profits from this beautiful year. So thank you very much for your time. I'm happy to have this weekly review from Poland. And by the way, it was a very lovely seminar. I enjoyed very much. Meet wonderful people here. And for those of you who replied about this on the Facebook with the picture from this event, thank you very much for that. Have a wonderful day.